Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.
We are now poised for a compelling exploration into the intricacies of beyond banking, NBFCs, and tech-enabled credit inclusion. Now, what this panel will discuss? This panel will discuss synergies that underpin borrowing expansion across various sectors. Let us reflect on the broader context of borrowing expansion in a global landscape where economic sectors are increasingly interconnected. Understanding the synergies become paramount. The strategies employed in one sector have a ripple effect on others, creating a complex tapestry that defines the borrowing landscape. To moderate this session, I would once again like to invite on stage Ritu Singh. And I would also like to invite her panel of industry experts, each of them bringing a wealth of experience and diverse perspectives. Join us in extending a very warm welcome to Karthik Srinivasan, Chief Business Officer, HDB Financial Services, Ramesh Iyer, Vice Chairman and MD, Mahindra Finance, Alok Aggarwal, CEO, Muthoot, Homefin India Limited, and Shachindra Nath, Vice Chairman and MD, Ukro Capital. Over to you, Ritu.
Thank you, Mugdha. So, our panel is about beyond banking because I think in the first half of the day we've heard a lot from bankers. But, we want to know how you're taking the financial inclusion agenda forward. And that's what we're going to focus on here. Let me just start by setting the context. And Mr. Aggarwal, for instance, if you could start. We look at the data, it says 78% of Indians have bank accounts today. Somebody in the morning was telling us 22% of them have taken loans, so they're using the account. Now, RBI also publishes this financial inclusion index where it says our score is about 60 on a scale of 0 to 100. What does all of this mean? Where are we really on the financial inclusion space, especially in the last few years where, Jan Dhan has given a big push. But what beyond that?
Yeah, thanks, Ritu. See, just to set the context and come back to your question, traditionally NBFCs have been predominantly the entities which have been focusing on financial inclusions. It's been an age-old story that the customers who were unlendable to the bank historically have been funded by NBFCs. And the trend as on today stays. But yes, there are many changes which have happened over the last decade. Socio-economic factors like Jan Dhan accounts, access to bank accounts, overall growth in the economy and penetration of the availability of credit to the rural sector have increased the penetration of credit offering to the rural sector and also the access of formal credit. Traditionally, there were money lenders who were lending in these markets, but now as we experience month on month, we have close to 25 to 30% of the borrowers who are first-time borrowers, who are new to the bureau itself. They don't have any borrowing history. And I represent a housing finance industry. So they are buying a home. It's not that they're buying a television set or a two-wheeler. So they have evolved in their journey and reached the stage of buying a home. And also what we learn is the demographics of the borrower profile is changing at a rapid pace. The average age of a consumer today has declined much more. Reflecting straightly the average age of the country which we live in, the number of Gen Z and the millennials which have, started getting employed, started working, and even in the smaller cities, they have an aspiration to own a home. So that way, the advent of borrowing in the rural sector at the bottom of the pyramid, even in the Tier 4, Tier 5 cities, has seen a tremendous increase. And a big boost to that is access to bank accounts, because ultimately, even if we lend, we need to look at the repayment and how the money would come back to us. So there is a need for a customer to have a bank account, even though they may not be borrowing from the bank. So that way, it has helped tremendously, and it's in a big growth.
Well, it's great that you're saying almost 30% of the new customers every month are actually new to credit customers. At that rate, Mr. Iyer, we would have been somewhere else on financial inclusion, right? But why is it with, the 12 large public sector banks, the, 14 or so private banks, the thousands of NBFCs, the formal financial system that we have in place today, financial inclusion, especially to the last mile, remains a challenge?
So I think we all should understand it's not only about lending, right? So if you had to only give money, I think by now everybody in the country would have got the money. It's also the ability to get back the money. So therefore, there will always be caution on how to lend and still be able to recover. And which is why you'll find this goes a little slow. But if you kind of overall look at it earlier, who got the money? Someone who could come to the branch or someone whom we could reach were the only ones who were getting the money. Right? Now with the coming in of digital means and supported by an ability to underwrite through data, that number is increasing, and that's where you see the financial inclusion now taking, at a much faster pace. Because this is not a new word, right? This was talked about 10 years back, and we were talking about financial inclusion, and all of us said, if we gave it to someone who otherwise could not get credit formally, we called it financial inclusion. Slowly, if you see the pace, it substantially increased the number that was just quoted, and it will be even growing faster. So I think the ability to reach now through digital means is increasing rapidly. And you will find the same, that they're also repaying digitally, and therefore the confidence to lend also will increase. So I think we shouldn't look at it as a static position. One should always look at it as how is it continuously increasing or improving. And maybe if you do the same panel 1 year down the line, the percentage growth would be much faster than we're talking from where it has started.
Well, we're certainly making progress and not regressing. Mr. Srinivasan, let me ask you then. We always talk of technology as this big game changer, and it has been. But, with this digital lending, and I was asking the previous panel as well, there are challenges that come along with it. In your sense, when you're looking at reaching to this new to credit customer using technology, what are the big areas of opportunity it has opened up, and what are the challenges that still remain for you, to not be able to get to that last mile customer?
Yeah, so let me answer that question in two parts. One is, I think, the proliferation of public digital infrastructure, right, in terms of whether it is e-KYC, whether it is collecting mandates digitally through e-NACH, e-agreement. Some of these have enabled basically two things. One is obviously reach a wider audience. Obviously, we have expanded the base. So what we are able to do physically, let's say in 2 days, we are able to do it in minutes. That's number one. And obviously, I think India is continuing. India is going to be young for another, I think, 15, 16 years, right? So we are going to have a new set of borrowers who will come into this pyramid every year, right? Now we have fairly evolved, I think, rule engines, ways of, deciding the customer without any track record, etc., which is what is helping the access for these new to credit much faster. I think this is continuing to go. I think this is a journey which will probably go on for another 10, 15 years. So just one point, I think you mentioned, we are also bankers, by the way. So I think you mentioned that you had bankers, and then we are introducing a different set of people. We are bankers too, to a different set of probably some overlapping clients and probably the same India.
No, certainly, and everyone acknowledges the role that NBFCs are playing in financial inclusion, going to the segment of customers that what I call bankers would probably not go to. But Mr. Nath, this digital phenomena again that everybody's speaking about, to what extent has it penetrated into the rural semi-urban area? Because that new Gen Z customer that he's speaking about, they're very much concentrated in the urban areas. And Mr. Ramesh Iyer, before the panel started, was telling me now the problem is not that I'm not getting a loan if I'm in an urban customer to figure out how to use it, but it's I've already got this loan, now what do I do with the money? So there's a saturated market in the urban areas, not so much in the rural.
Yeah, so Ritu, as you know that we are a very dedicated small business lender.
MSMEs, yeah.
And the reason why, we thought that what some of my seniors have achieved in the industry, because we think that India belongs to Bharat, and if Bharat has to remain stable, people need to get employment, and that can only come from SMEs. If you look at, and our definition of inclusion is different. I think so inclusion, and we struggle this with most of the DFIs of the world, new to credit is what is only considered to be inclusion, which we think is the wrong definition.
Okay.
If you look at MSME credit in India and its gap, it's 85 trillion rupees, of which 20% is the formal and 80% is informal credit. Of that, 95% this gap belong to the SMEs which are in the turnover range of 15 lakh to 15 crore. The new to credit small business portion is extremely small. So that's why we focus only on that segment. It doesn't mean that he has to be new to credit. He has some credit, but when you extend more credit, then the level of employment which gets generated is far more significant. So all of our work related to impact is to provide credit to underserved market, not the unserved market. That's point one. Number two, that there is a massive transformation which is happening through two things, data plus technology. Why we differentiate? Because like it has happened in consumer financing business in 2008 onwards and personal loan business, we think next 2 decades, data would drive the credit decisioning. So 3 things of the lending, the intent of the customer, the eligibility and ability to repay. The data ecosystem is allowing lenders like us and many others to assess the ability to repay, and technology is facilitating that. Having said that, the under-penetration and the segment of the market and what role can play is still, I think, so we are very far away. When I look at the opportunity and amount of work can be done, I keep saying that, this Om Shanti Om's dialogue, कि किसी चीज को अगर दिल से चाहने की आप कोशिश करो तो पूरी कायनात आपके साथ लग जाती है. But I think so kainat, when it comes to MSME lending, is still far away. So our kainat consists of equity provider, the debt provider, the regulators, but the whole kainat is actually still is bifurcated. So that focus, if you have to really create a revolution when it comes to inclusion with respect to small business, kainat has to support it. Right now we are just, drumming our own beat.
Okay, Mr. Iyer, is kainat supporting, your growth in this area? And I wanted to touch upon the regulatory environment as well. There are some segments of, retail lending, for instance, that are growing too fast. And we spoke about how the regulator wants to probably put a spoke in the wheel for the time being so that, credit growth is moderated. How do you see the regulatory environment, how enabling it is for inclusion, specifically, in the retail segment?
So, since we are in the movie mode, from Kainat, it actually, we sometime have to be Kayamat se Kayamat tak. So we have to move from one situation to another situation. And I think NBFCs are very, very trained and tuned for that. See, so far as the regulatory framework is concerned, I think they normally come out with a broader thinking about how they see things. And each model will have to look at it as how it impacts them or affects them, right? I think the industry players are talking less about it, and everyone else outside the industry is speaking too much about this problem. Because I don't think we have seen it as a problem of not able to raise liquidity or as the interest rate zoomed or have it to bring so much more capital, have it to give up so much more business. None of that has happened, but in the public domain, this seems to be the discussion. So I think it's important to understand that when a regulator comes out with the guidelines of this type, he's trying to put you on watch to say that while we appreciate you're growing aggressively, be mindful of this growth because our data tells us a different direction. So I think it's for the industry players to finally go deeper and understand how does their model behave and is there a need to do. If I speak for ourselves, we don't have an unsecured loan book. We have a completely secured book in the form of vehicles and tractors and whatever else.
But as an NBFC who's borrowing from banks to lend, your cost of borrowing is also going up at the end of the day.
I mean, it's okay. Why are we only worried about this industry? In any industry, the raw material price goes up, the end finished good price will go up. And same is true with NBFC. I mean, if we look at what we borrow as our raw material, we should accept the fact that if the raw material price is going up, the finished good price will go up. And I have not seen that if the finished good price goes up, the demand falls. If there is a need for the product, the demand never falls. So take vehicle, for example. Prices keep going up and the number of vehicles sold keeps going up. Because there is a need, right? I think if we try and create a product which is not required by the end consumer, the demand will fall. It's never fallen because of the price, right? Similarly, the ability to deliver as required, because this is one product which requires to be delivered as required on time. Somebody is asking for some money today, and if I'm going to take my own sweet time and give it tomorrow, it's gone. So I think the concern is not about what happens because the price is going up. I think the concern is really about, are we designing the product right And therefore, does it meet the needs of the consumer? I think if that happens, I think this will remain a debate of, is this pushing up the price? Will the demand fall? I don't see it happen that way.
Mr. Aggarwal, how are you designing the products then when you look at this, rural piece of the puzzle, for instance? How are the aspirations of your typical home loan borrower changing today as opposed to what they were, say, 10 years ago?
Yeah. See, one of the key changes which we have as an industry noticed is the need and the ability to try and acquire a home much earlier in their lifetime. It has seen a lot of shift from, say, an average age of a home buyer from early 40s to late 30s. Now it's come to early 30s and even late 20s. So in their journey of life, people want to acquire home on an earlier stage. And that is true both for urban and rural customers now. We see a lot of applications from Tier 3, Tier 4 cities where the age profile is between 27 to 35. Now, how do we alter or try and offer a customized solution to a product? The customers we cater to are mostly customers who are from an informal segment. They are not your, say, formal salaried customers having a, take home of a bank credit at the end of the month. They are having small businesses, unorganized cash flows, and not a very regular flow of cash. So it is more of an customized assessment-based business on each case where we use both technology and physical touch and feel to assess the customer. And then the loan amount, the tenure, the EMI, what he's comfortable to pay with based on the risk assessment is then done. But over a period, we have developed a lot of understanding of such customers. And that's why we have internally temporalized and customized the solution offering. In a way, we are able to cater to unorganized customers much better as we understand their credit and cash flow profile. So this has helped a lot in terms of bringing them to the formal sector of, lending.
Okay, Mr. Nath, how would you apply that, say, for instance, in the case of MSMEs? In the last 7-8 years, a whole host of schemes have been announced by the regulator, by the government, to enable faster credit for MSMEs. Which ones have moved the needle, which ones haven't, and what more would you like to see the industry, the regulator, the stakeholders do for this?
It's a difficult question, but it is a fact that, let me define it this way. See, ultimately in any economy, the policy maker, which is the government, defines what need to grow. Now, the largest voting bloc in our country belongs to MSME. So, latest Udyam data, only 3 crore registered Udyam people and 15 crore employment has been reported. Historical data have been 6.3 crore of MSME and 11 crore employment, which means the actual number of people employed by MSME is far bigger than what we think.
These are just the DPIIT registered MSMEs.
Yeah. So, which means that for policymakers, such a large pool of employable, population is their vote bank, and that's why they need to be supported. So that's the good thing about it. That then translates to regulator, and then that translates to the business. So everyone, right from the government, the regulator, the lending institution, everyone want to do the MSME. But the problem is little more complex. While the data has come, while the technology is enabling is, while by multi-product approach we are reaching, but this problem is so complex. Think of this way, and I keep giving this example, a Chettiar girl getting married to a Punjabi boy, and now they have a child, and they, after 5 years, and I was listening to this generative AI thing, they gave him an Alexa because both of them every day go home. And this child is telling Alexa, Alexa, please sing me a song which is in Tamil, but my father listens it in Punjabi, and I listens it in English. Now Alexa is confused that how can it sing a song which actually is listened by 3 years in 3 different languages. So that's the complexity of a small business, that we all want different things but not being able to solve the problem collectively. But it is a matter of time. I think so. If you look at the pools where the small business are getting created, the micro market through multiple marketplaces, the ONDC, the OCEN, the account aggregation, the reach of distribution, all is getting settled. It's just that with Dil Mange More, the speed and what you could do versus what it is happening, you feel very frustrated why it is not moving in that direction.
Mr. Srinivasan, or kya dil mange? I want to ask you, what are you seeing at HDB?
Sorry?
What are you seeing at HDB, for instance? Or kya dil mange? He's saying, there are, we have the account aggregator, we have the ONDC, we have the open network, OCEN, for instance. और क्या चाहिए?
Dil mange more or customer mange even more. So,
how are financial aspirations? Where are you seeing, how the credit needs are evolving for your customer base?
So if we look at HDB, I think we serve the lifestyle needs of a customer, right? So typically you start either with an exigency loan or a small time consumption loan, which is typically a new to credit customer in India will start with either a consumer durable loan or a two-wheeler loan. And that's how he starts building his credit history. Now that has, as I said, proliferated. There are more people coming into the base. And as they progress and they move up in lifestyle, right, in terms of owning an asset or income generating asset or home finance. And I was surprised at the number of NTC which he's talking about in home finance. I mean, it is obviously staggering, right? So I think that is what I think most of the NBFCs now are moving towards. I mean, I think the large ones are multi-product companies. So obviously they will serve the customer at various points of time. So typically things like cross-sell, how do you engage the customer throughout his life cycle? I mean, those are the more important aspects which are coming in. Earlier it was still run as a very, very monoline. I give this product, then I come back, some other team goes and tries and do something else. So that evolution and that journey getting stitched together is like playing a big role now going forward.
Well, given that we've been speaking about the role that you all have been playing in financial inclusion, I want to ask you, how important is collaboration with the technology players on one hand and with the legacy banks as we know them on the other hand today? Or do you not think, because all institutions like you, for instance, are evolving into more tech first than, legacy first, your traditional finance first, will the need for collaboration reduce? Do you think you'll be able to capture a larger market by yourself?
Fundamentally, when all of us started, we were trying to do everything ourselves, right? We were setting up branches, doing credit, meeting customers, collecting, resourcing business. Everything was being done by us. It only takes you up to a point, right? If you have a growth aspiration, both penetrated deeper, working with all segments of customer, wanting to be in all products, it's not possible for any one entity to be all of that. That's what gave birth to collaborating with people. And that's the time it moved away from competing to collaborating. Right? Earlier we saw everyone competing. I mean, if you recall a few years back, there were discussions about the banks feel that you're competing with them and therefore they may not want to give you enough money. And today we have completely turned it around and say that the banks want to work with you and want to co-lend. You see where the competition has moved from whichever way, from wherever it has come to wherever it is. I think what's extremely important to understand is each of us as a player have to understand what is our core, whether core as a product, core as a geography, core as a segment of customer, whatever we may decide, or a combination of this. Anything outside of this core, but you are still able to resource enough of consumer, do you want to let them go or you want to collaborate with somebody and operate? So if we look at us as an example, if we were to get, let's say, a very Primex customer in rural market who is demanding a very fine rate, we may think that's not the customer we want to service, but we may take them to a bank as a co-lending possibility, right? So I personally think if we are talking of overall expansion of the market has to happen, then collaboration is a must. I think the other thing all of us have to recognize is we as intermediaries, if we don't expand the market, we will always keep talking about how will you compete, will the rates come down. I think intermediaries have a phenomenal role to expand the market, whether the OEMs on the other side accept it or not, right? And therefore, I think the twin role that we as intermediaries have to play is to fulfill needs of the consumer that you think are your set of customers and be able to be a provider to the other set of customers by collaborating with the other players and in the process overall expand the market and make it much bigger.
Mr. Srinivasan, for instance, could you tell us how, what strategies you could put in place to expand this market, whether there will be more collaboration required, whether there will be a transformation in your own, business models required, or, how do you think lenders like you could do that?
No, collaboration is the key. I don't think, as Mr. Iyer said, I don't think we can do it ourselves. I think we don't have the expertise. We don't have the, beyond a point, we don't have the mindset, right? And obviously there is something which we are good at. We are good at distribution, we are good at identifying risk, we are good at designing products, we are good at engaging with customers, right? So now, what is the best way to engage with the customer? How do you make the journey faster? At the same time, I think there is always a two-edged sword. Any customer journey faster has to be measured with risk mitigation, right? I think a couple of panelists before also spoke about this. I think that's the primary objective which we have. And I think collaboration is the key. Collaboration basically not in terms of just technology, even in terms of, as you see, many nuanced partnerships are evolving, right? In terms of co-lending, in terms of some of the other areas. So I think those will continue to thrive and keep going forward.
So nobody here thinks a little bit of healthy competition would be good, huh? Mr. Aggarwal?
To each his own, but going forward, as we want to expand the market, there's nothing better than collaboration because it doesn't hurt anybody. It is a win-win for all. And you have your own skill set, you have your own strengths. Like we want to understand customer mindset, customer underwriting, our ability to risk. But it doesn't take anything to get a specialist on board who will aggregate customers for me, who would help me facilitate underwriting better and faster, who would help me deliver that loan to the customer much faster than I'm able to do. And why only technology? Today we are collaborating with government. They are facilitating us with PMAY data. They are facilitating us with CLSS data, EWS data. We are working with municipal corporations at the ground level to see which are the subsidized housing scheme available for customers, where can we participate as lenders. So across the way, if you are able to help the consumer at the end and the customer wins at the end, you as an organization will win. So in that way, collaboration is a win-win approach, and I think that is the way ahead.
Okay, we just have 5 minutes to go. So closing comments from all of you, starting with you, Mr. Nath. What do you think are, some of the available technologies, some of the initiatives, some of the schemes or regulations that give you most hope as an NBFC that, business will grow from here, you'll be able to enable better financial inclusion with profitability?
Yeah, so that your audience don't feel that I'm very filmy, on a serious note, I must tell you this. First and foremost, the reason why NBFC exists, besides there are so many banks, NBFC existence doesn't mean that banks are not capable. But, we are same set of people, we come and work for the banks, and sometimes for the NBFC, banks have better cost of capital, much higher size of capital to dispose. It's just our sheer focus on a customer segment which makes us relevant. Whether it is Mahindra for tractor, whether it is HDB in their customer segment, that's why our relevance is always there for a customer segment which otherwise difficult to serve from the mainline financial institution. Second, we believe that time has come when it comes to MSME financing, that what you have seen in terms of the development of tech and data architecture starting from 2010, it has now come in play when it comes to small business financing. And there are a host of activity, whether it is Udyam, whether it is OKEN, whether it is ONDC, whether it is KYC, and the availability of data to underwrite the credit gives hope that next 2 decades, you will see the explosion of credit for small businesses. Now, some of them are very small initiative, where Udyam is just an identifier for an MSME, but the ability to understand a customer and see the data through them is very, very powerful, right? The entire priority sector lending norms and the identification of MSME customer has become so simple, just by one simple thing. So there is host of things which are happening. The challenge still continues to be, for somebody like us, which has not a parentage advantage of like an HDB or Mahindra, is to be highly collaborative and work with banks, financial institutions, and funnel this and make a large business. So, and we continue to keep doing that. We are nimble. We think that we have some ability, which is probably 5 or 10% better than some of our peers set in that segment of the market, and we have to keep selling that to larger financial institutions and be collaborative with them.
No doubt that all the stakeholders that are in the system are needed for better inclusion. But Mr. Srinivasan, what gives you most hope?
Most hope, starting with the big picture, is GDP growth. I think that gives me the biggest hope. Then obviously an aspiring population, which is coming more and more into the I would say, acceptable credit filter. Right? That's really changing in terms of a segment of population which we can lend to, sustain it, maintain a portfolio and therefore achieve economies of scale, right? A lot of it is like I would say a virtuous cycle. So the more adoption customers have, the more economies of scale we are able to drive.
So the overall growth of the economy and financial institutions are going to be reflections of that.
And on the digital front, I think primarily, whatever we want to do and what the customers want, I think there is a convergence towards both, right? It's not that the customers want something else and the suppliers want something completely different. I think
one hopes there is alignment there. Mr. Aggarwal, your final thoughts. What gives you most hope?
I think things are looking very bright, and the India growth story is looking very promising. We are very hopeful because still housing is at a very nascent penetration level in India. So there is immense scope. We are the most populated country in the world. Everyone needs a house. So the market is very big for all of us to play, and it is ever increasing. So it's a lot of positive side and a strong story ahead.
You have the final word.
Yeah, I think it's a misnomer that we all think that we choose a customer and give a loan. It's actually the customer chooses from whom he wants to borrow, right? And therefore, that gives me a lot of hope that if you run a business with a purpose very clearly, and you design the product and deliver the way the customer expects it, and you're able to communicate that possibility, then the customer will choose you. And that gives us hope that for the last 30 years, we've run the business, and every 3 years, I've been asked this question, that the competition is enhancing and what you really think. And every time I say that if you are useful to the customer, I think there is enough to do. I think we as a banker or an NBFC, the way we have to think about all the time is what are the changing aspirations of the consumer and what are we doing about it in the form of product, process, delivery, channel, whatever you call it,
to stay relevant
and allow them to choose.
All right. On that note, Mr. Nath, Mr. Srinivasan, Mr. Iyer, Mr. Aggarwal, thank you all for candidly sharing your thoughts, and thank you for your time here. Thank you.
Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.